right, I hope you're watching. A lot of you folks reached out to me on X and YR, in part because of this guest, Spear Invest founder, CIO Ivana Delevska. All right, so we talked about this. You've been talking about this whole thing for years. For the last 3 years, you've kept us on this. But the magnitude of this, just explain like the magnitude of this, because they crushed every aspect of this earnings report.
Yeah, Charles, thanks for having me. That is absolutely the surprising thing that's coming out of these earnings. We've been seeing a slow and steady growth for these companies in terms of from the model training era to now, but now we're seeing a big step up. And you saw it with Dell, you saw it with HP, and now we're seeing it with Micron. So it's clear that something is changing compared to what we had a year ago, even though the growth then was pretty high.
Yeah, I mean, it's accelerating, and then I think the margins are one thing, right? The cloud, 78%, core data at 83%, mobile, 86%, automotive, 75%. You know, that's just one of the things that's just sort of, I know the big argument has been, is it sustainable? You know, can they keep it going? That was one of the reasons Wall Street was late to the game in the first place. You had decades of just like this, you know, just cycling down. Now it's broken out. One of the keys is the strategic customer agreements, SCRs. Explain why those are so important, because this is, for me, it feels like this is what's convinced a lot of people who were doubters.
Well, Charles, the key with these customer agreements is that they would limit the cyclicality to the downside. So what people are concerned about memory specifically is that it's a commodity business. So while they're making so much money now when prices are high, what happens when prices turn around? So these types of agreements first reduce the cyclicality, but also show that customers have visibility 3, 4, 5 years out, and they're able to commit to these agreements.
All right, so now they've kind of smoothed that part out, but then we're going to show another part, because it feels like, okay, two things. You want to be able to say, we're going to be able to maintain that pricing power, to your point. We're going to get away from this sort of commoditized thing that, you know, up and down, Wall Street doesn't believe in us. But it feels like by arguing, take a look at automotive and robots. Humanoid robots carry 10 times the amount of memory, right? And this could begin the latter part of this decade. They're talking about extending this a multi-decade demand. I mean, what if that's true?
Well, Charles, we believe that it will be true. What's not clear if you're going to see a pause between the agentic build-out and then the robotics build-out, right? So that could cause some cyclicality, but there is no question that companies are working on humanoid robots, and there is no question that they're using 10 times the memory. So those two are given. The question mark is more, does it come on top of the agentic AI cycle or further down?
I got you. So could there be a little bit of a lull? Because last year was supposed to be the year of humanoid robots. They're a little bit behind on them. All right, so here's the thing. Valuation. Folks are saying, you take NVIDIA, 35 billion versus 50 billion next quarter, profits 20 billion, their profits are going to be through the roof. And this has got had recently a $5 trillion market cap. Should Micron be trading even higher? Is it, as much as it's gone up, is it still maybe cheap here?
So it's absolutely cheap on a PE basis. The question is going to be, how does it go through a downturn, right? Because what NVIDIA has going for it is that through a downturn, they don't lose money. So they continue to generate cash. The memory names historically do have quarters where they don't generate cash flow. So
well, they've had them before, but they're trying to say that's all changed. We have to wait and see.
And I think to get the multiple re-rate, you do need to first see one down cycle, and therefore you can from there assess whether they're less cyclical now than before.
Couple of names you still like. The semiconductors are acting pretty good today. KLA 10 cores had this huge run up already. You also like Lam. I would suppose for the same reasons. What is it now? Because these were names that didn't do a lot for a long time.
Yeah, so Charles, really the key here is that these companies are play on the memory capacity addition. So while with memory pricing, you're wondering, are prices going to keep going higher? Are they going to go lower? With capacity expansion, we know for a fact that it's going to be happening, right? So whether it's going to be double or triple from here, that's the question. But we know that that's coming, and that's been the inflection. This year was the first year that we're realizing, hey, we need more memory. I think next year companies will realize we also need more CPU capacity. So those two are the big drivers.
I keep hearing CPU, a lot of upgrades this week on AMD, a lot of upgrades this week on ARM. These two have been getting a lot of upgrades, and you talked about this a few months ago, how we've segued ironically from GPU to CPUs being the bottleneck, and that's going to be the case for a while too?
Absolutely, and that's driven by these AI agents, right? It's no longer only about memory training.
Right.
The agents need memory, they need CPUs, and they need a lot more networking. So those are the three areas.
Are those
that we're
agents
focused
ready to really displace software? Software stocks, one of the reasons the NASDAQ is down today, software is getting annihilated. I mean, and I know people who are calling me up, or experts I know, they're like, this is insane. There's no way in the world people are going to get rid of Intuit and say, let the AI agents do the work, at least not for a long time.
I believe it is a real structural pressure for software applications. I think there are sides of software like cybersecurity or the companies that provide platforms and orchestration. Those could do well and could be good entry points here. But for applications, I think they're facing real risks. So unless they're able to capitalize on their existing market share, they are really coming under attack.
They really are. And sometimes you have to listen to the market. For instance, these consulting names, I don't think they'll ever be the same. Great stuff, Ivana. Thank you very much. Appreciate it.